Afternoon, everybody. Right, let me just get rid of this really quickly. Hide that. There we go. Afternoon, everybody. Hope everyone is well. Thanks for joining me. If you are regulars, you're always showing up for me. I do appreciate it. If you are new to the channel, I talk about investing money as a general theme here on the channel. I'm a qualified financial advisor, qualified mortgage advisor, so I like to bring a little bit of my experience to maybe some of the news that we're hearing at the moment to try and make it make sense to normal people. So if you've not subscribed already, maybe consider subscribing. If you enjoy this particular stream, then do me a favor, hit the like button. That will help me out with the YouTube algorithm. Also, if you do know anyone that may be impacted by what we're going to be talking about today, which is the increase to the mortgage rates, the banks are doing what the banks do, then by all means, please share this as well. Right, let's get into this. So we had the budget literally this week. And I think it's safe to say that we're going to be doing a breakdown of the budget anyway on Sunday with Gary Stevenson. He's an economist. He's an equality economist. He's a multimillionaire, ex-trader, Citibank trader. So we're going to be breaking down the budget specifically on Sunday. But one of the big things that did come out in the budget was the fact that inflation was predicted to run at about 4% next year. What that basically means is essentially that the cost of living is going to increase. So it's going to remain on par and continue to increase. Now, we have started to see this anyway. We've seen this in energy prices recently, and that has put the squeeze really on average families here in the UK. What this mortgage rate increase has basically done, and to be honest, I've been in the issue for 16 years. This is a little bit naughty of the banks because what they have done is they are preempting that the Bank of England next week on November 4th are going to announce an increase to the Bank of England base rate. So the Bank of England base rate right now is 0.1%. That's why for the longest time, maybe the last 2-3 years, we've had some really, really attractive mortgage rates. I will talk a little bit later on about the possible impact that this might have for the mortgage market as a whole, because when rates typically increase, there can be a bit of a knock-on effect to other areas of the property market. So we'll talk a little bit about that later on. But essentially what they've done is they've moved. So who was it? It was HSB and NatWest. They raised their rates yesterday. Barclays are due to raise their rates today. So for savers, what that essentially means is that if you have an average mortgage of, probably about £211,000, you're going to see an increase in your mortgage payments by about 500 quid. Actually, there is a graphic that I do want to show you, which I think is really relevant to this conversation. So right here, you can see an indication of if you've got a borrowed amount based on the base rate rising to 0.75%. And by the way, there is a conversation that the bank rate is going to increase over the next 12 months. By the end of next year, they're expecting that the base rate is going to be about at 1.25%. So within this region. So if you've got a mortgage of around about £150,000, then you're going to see an increase of £600 annually, 250. That's going to cost you £996. And if you've got fairly big mortgage at 450,000, then the increase is going to be about £1,800. This is real money that you're going to have to allocate to bills. And this is a bit of a hammer blow, given the fact that, you look at where we are right now, stagnant wage growth, increasing inflation. Now we're increasing energy prices. Now we're going to have to contend with mortgage prices also increasing. So I guess when I talk about this and I try to consider what you should be doing if you are either on a standard variable rate right now, there's an interesting article, actually. I'm just going to find it here that I found a little bit earlier on. They were actually, they gave a little bit of a view around what might happen if you're on a standard variable rate. I'm just going to show you this right now. And this is according to the Liberal Democrats. So maybe take this with a little bit of pinch of salt because of the political dive to this. But they basically said that the data indicated that an average borrower on a standard variable rate of 3.26 would find their payments rising by more than £42 a month or £510 a year. For fixed rate loan mortgages of 2%, the increase would be £25 or £300 per year. Now, in isolation, those numbers may not actually sound like they're big numbers, but actually, when you're having to find an extra £200-300 or allocate an extra £200-300 to something else, and money is tight, it becomes really, really, really difficult. And I take a step back and look at this from the macro and think about people trying to get on the property ladder, particularly in places like London. This becomes even more difficult now because the mortgage become more expensive. And I think this is where the conversation around what does this actually mean in terms of the knock-on effects that this might actually have. So if you look at the mortgage market for maybe the last 2-3 years, really, really low rates. Some people have been able to lock themselves into a fixed rate of maybe 2%, maybe some people even 1%, depending on the loan to value. And the loan to value is, the value of the property versus the amount that you're taking out on the mortgage. People have been enjoying really, really low rates. And what that has meant is that because rates are low, people are buying properties. People are actually lending money because the cost of borrowing money is so low. What this increase in mortgage rates will do is, yes, it does have a negative impact in terms of if you have a mortgage right now and money is tight, yes, you're going to feel a further pinch combined with stagnant wage growth, energy prices increasing, and then inflation increasing, perhaps the price of food and other commodities, consumables that you're going to use. But increasing the mortgage rates could potentially mean that actually we see a little bit of a counter effect in the property market as well. What I mean by that is you might find that the supply versus demand equation gets shifted slightly. And because there will be less people looking to potentially buy because it's going to cost more, property prices might come down. That could be a positive for first-time buyers or people looking to get on the property ladder, potentially. But it swings and roundabouts. It's a give and take across that equation, and we are facing a period of inflation, and we know that is the case right now. I've made videos previously where I talked about the fact that the rise in energy prices and the rate of inflation. So inflation is all about the cost of things increasing around you. So go into your local shop, Tesco's, doing your weekly shop there. If it cost you £100 last year and it cost you 120, that difference is inflation, right? So we know that the cost of things are going to increase, partly because of COVID and supply chains. And the general view on inflation, and this has been true to the UK and it's been true to the United States as well, is that the central banks have considered it to be transitory, which means that essentially they think that it will kind of taper off, everything will get back to normal as we kind of open up fully post-COVID. That doesn't seem to have been the case. And the Bank of England, if they do make the move to increase the interest rates next week, will be the first global central bank to do so. Now, the rumors are that they're going to increase the bank rate by 0.15%. So currently, the bank rate is 0.1%. So it means that the rates will go up to 0.25%. So the banks are basically moved off the back of that. But I think there is a telling question here, because when you speak about interest rates specifically, this is a coin. This is a double-edged. It's a two-sided coin. Yes, you have borrowers, so people who are looking to borrow money, mortgages, so on and so forth. But also, what about for savers? Because if you do have cash in the bank, what you would have found is because of the low interest rates, you're not getting anything in terms of a return for cash that you hold in the bank. So technically speaking, if you are a saver and the mortgage rates are going up, technically speaking, you should see an increase in the rate being offered on savings accounts. Being cynical, I don't think the banks are going to do this because it doesn't actually make them money. This raises the question, what about bankers? And this is a question to you. Do you think the banks will increase interest rates for savers? I will be very, very surprised if they do. I'll be flabbergasted if they do, because the banks are the banks at the end of the day. And this, for many people, will be infuriating. For everything that we've been through, normally people have been put through, the cuts to universal credits, the increase to national insurance contributions, you compound all of that with COVID and people losing jobs, to now get to the point that interest rates are going to go up on the mortgages. it feels like a slap in the face for many people. And this brings me to really what are the things that maybe you can do to kind of help you cope through this period of time. I think the most important thing right now is, take a step back, maybe grab a piece of A4 and just try and examine your finances. Draw a line down the middle of a piece of A4, write down your income, write down all of your expenditure, and really scrutinize what you have going out, particularly if this is going to make a really big material change or impact on your finances. Or even if it does make a small impact on your finances. The point is, if this is going to impact you, if you're going to see your mortgage payments increase and it's going to impact you, then it's really, really important that you start to have a look at your finances really, really closely and try to streamline what you have going out. I know that that can be really, really difficult to do. I've been there. I know that. But it's crucial that you don't bury your head in the sand and just think, we can get by on things like credit cards and overdraft. Those things will end up costing you more money. In the end, you're going to give more money to the banks that are charging you more for the mortgage. So it's time to perhaps maybe take 20 minutes, write down your income, write down your expenditure, and just have a look at what you've got going out. See if there is anything that you could maybe perhaps renegotiate. Sky packages, maybe broadband packages. Ring them up and say, look, things are a little bit tight right now. I'm thinking of reducing my services, see what they basically do. I do that on a yearly basis, and often or not, Sky in particular will give you a discount because they don't want to lose you as a customer. So shop around for deals. Try to streamline your income, your expenditure from your income. Try to retain as much as you possibly can, and try to make sure that you understand the difference between the needs and the wants. In times like these, the wants are the things that tend to go by the wayside. Those things can come back a bit later on. We can talk about additional income, so on and so forth. This is, again, one of the lessons from COVID, having multiple streams of income, quite an important factor in today's age, particularly when you see these kind of things happening. Those things can be hard to develop, admittedly. However, just trying to think about what skills you might have, what you might be passionate about that you might be able to convert into an income stream, or even if it is selling simple things on like eBay for that additional cash to come in through the door. Now is the time to really sit down and have a look at your finances from a pragmatic point of view. I wish that we could snap our fingers and basically have a word with the guys who head up Barclays and the big banks who have done this. But unfortunately, we can't. So we are basically left with the bill. We are left with contending with these changes and having to, move around our finances accordingly. It's not ideal. It is a bit of a piss take, if I'm completely honest. They could have waited to see if indeed the Bank of England was going to increase the bank rate. I would hazard a guess, because they have done this, we will definitely see an increase to the Bank of England base rate next week. They probably had some really good information to signpost that, and they've moved before it even happening. I hope, and this is my sincere hope, that because they have done this and actually increase interest rates, that they are going to increase interest rates for savers as well. But I'm not going to hold my breath. But guys, I hope you found that useful. This will be available after for viewing a bit later on. So if you are watching this on a replay, appreciate you for tuning in. There are 48 of you on the stream right now. If you do have questions, this will be the time for you to pop some questions in the comments. If you do have a mortgage, by the way, and you are on a standard variable rate, I would strongly recommend right now that you start looking at maybe trying to lock yourself into a fixed rate mortgage. You've probably enjoyed the standard variable rates being relatively low over the last maybe 2-3 years. But if you want to get yourself into a position where you know exactly how much your mortgage payments are going to be, a fixed rate mortgage would be great for you in that regard. If we do have maybe 2 or 3 interest rate rises through the Bank of England over the next 12 months, and they are signposting that that is going to happen, the last thing you want is to see an escalation in your mortgage payments. If you don't want to see that, getting yourself into a fixed rate mortgage right now and locking yourself in for maybe 2, 3, 4, 5 years, depending on what deals are available. If you guys are interested in this, I can do a live where we actually maybe go through some of the best rates on the markets. Let me know if that will be useful in the comment section. But if you are on a standard variable rate mortgage right now, you might want to be thinking about getting a fixed rate mortgage. For that, you can go to your lenders, you can go to your bank, or you can go to an independent mortgage broker. But definitely have a look at that. That will help you stabilize your finances and at least allow for you to be able to account for the fact that you have a certain amount of money going out every single month and help you control your budget. There is a question in here. Do you think this will impact EU and BCE politics or not at all, given Brexit happened? I think inflation is impacted. Even in Europe, you're going to have inflation, right? I mean, I haven't been following the inflation numbers for Europe specifically, but the inflation numbers and the impact of the supply chain, energy price increases, I think that's also being felt within Europe. European politics and European sort of policy, though, I guess they will have a look at it from their point of view specifically. So I don't really know what they might do, but I would imagine they will be looking at the numbers in Europe to decide what they're going to do on their rates. But the EU could increase the central bank in Europe could increase interest rates. Will that impact us? Maybe, but the main bank that we're concerned with is the Bank of England, because that's what all the savings rate, the mortgage rates, the lending rates are basically based on. So it'll be interesting to see what will happen in the EU. But I'll be very, very surprised if they're not feeling the impact of inflation and the increase that we've been seeing globally, because it is globally. I think inflation was at 3.1% here in the UK. I don't know what the numbers have been for the EU. I haven't really been tracking them. But even in the States, the inflation numbers are pretty high. So it will be interesting to see. But guys, okay, there are no other questions in here. I will be on a bit later on this evening. There is a video at 5 p.m. I moved it from 12 p.m. to do this live this afternoon. So there'll be a video out 5 p.m. tonight. Hope you enjoy it. We do have Gary Stevenson on the show on Sunday at 9 p.m. It is going to be a live stream just like this. He's going to be breaking down the budget for the salient bits that are important to everyday people. We're going to be doing that on Sunday evening at 9 p.m. So hopefully you can join me then. But guys, whatever you're doing today, this Friday, have an amazing Friday. I will catch you at 5 p.m. later on.